Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Tuesday, the 16th of October. And this is 2018. We're just after 3:37 p.m., so the markets have not finished trading. The settlement prices are in, and gold won't be down this much on the settlement, but it will be an area that you have to look at because since the earnings on Netflix and the others came out, these markets have given up some ground. This was the monster day in stocks. So what gold, silver market, copper, other metals have to do is back on with the risk-on mentality. You see that in the stock market right now, and that takes away from some markets. So you're getting a bid back into the dollar, you're getting offers back into the euro at this point in time, you're getting movements back and forth, and you're going to go through that as the earnings season begins after a huge break in stocks. Is that bad for gold? Not necessarily. For the week, we're still up $12. The market has gone from 1161.40 up to today's current action in the 1230 level. Still pretty good action. You can see you have an inside day on the chart. Inside day means you didn't take out the previous day's high or low. When I add the swing line to it, you still have a pattern of higher lows and higher highs. That is bullish. When I add moving averages, the support for the market, if you come down to it, is 1204.60, the 18-day average of closes. I call it 18-day MAC. The 100 days up here is a resistance point. The problem is, if the market decides to reach for this 18, you're going to have to take out 1219.30, and you will make the pattern one then of a higher high and a lower low, so you'll momentarily step out of any trend at all. You'd still have upside bias since you're over the 18-day average of closes. In terms of the Bollinger Bands, the market continues to ride them. In other words, yesterday over them, today the market back under them. And that's what is a sign of a market that's pushing out to the upside, and that's what you're doing. Markets will ride them at times like you did back here. You see that? You can do all that. Often accompanying riding them, the market initially gets overbought. It gets stronger later on if both numbers can get and stay over 80, which they're not even close to. Therefore, this is a market that is overbought, narrowing into a lot of resistance. I think pros are taking money off the table here, hoping to get a pullback to come back in. That doesn't mean I'm right. I also don't know if they're giving up their total position, but I think they're doing that. On the GLD ETF, you went up again, you hit the 100-day average yesterday, today, and now you got an outside day down. I think that's important. Here's why. In order to set up a trap for bears, what you'd have to do is take out today's high. If you did that, I don't have a number that it could reach up to. Normally, if you did that, I'd look for a key moving average above the market and or a Bollinger Band. Well, I like the last key number in gold as the 100-day average. I know some people look at 200-day. I'm not in that camp. You can, and I don't know where it would be. I didn't plot it on the chart. So I think the market could be getting into the order of wanting to correct a little, and you see in GDX how the market's pulled back, getting back under the upper Bollinger Band. It had been going back and forth on it. So I'm going to say in all these markets, they still have upside bias. They still look bullish as a group. However, they've hit important areas that they might decide to back off of. When I look at the gold-silver ratio, has not begun to do what I want longer term, where this ratio would turn under the 18-day moving average of closes and then start favoring the silver, carrying the other markets with it. Rather, silver's gone up to the upper Bollinger Band, the black lines, and keeps failing. It's got something of a sideways pattern here, which could be something that builds, if you will. Just think of it as a pipe and you're spinning inside. The market is not overbought. It still has upside momentum. It is not a trend. You have a lower low and a higher high pattern that has come up and hit a resistance zone. In the copper market, we have not been strong enough at all to get up to the 100-day moving average of closes in green. That's the first thing. We're getting something of a Chinese slowdown. That's the second. We're seeing it in a number of areas. We're going to get China's GDP projection, I think later this week. We'll see what that does. In the meantime, I would respect the fact that the market's staying within the Bollinger Bands with a higher high, lower low pattern. The bias is down. The market's trying to get some downside momentum, but it is not trending to the downside. In the platinum, you're up to a resistance point. You've hit the upper Bollinger Band, and just like bang, you hit a brick wall and you can't get through it, that's so far what this market is doing. Could that change? Of course it can change, but it hasn't. That's the important part. Support becomes the 100-day average because it's over it. The problem is you're overbought. You either work out an overbought condition by prices dropping back or staying up here and letting the slow stochastic develop what's called an embedded reading where both numbers get and stay over 80. You're nowhere near that. In the palladium market, you have a market that, as I said, hit the 18-day average yesterday, came back to the upper Bollinger Band, and now you can see a Y, at least an attempt at a sideways action in the Bollinger Bands as momentum is working itself down. The pattern on the chart is actually lower highs and higher lows, not a trend just yet at this point in time. And in the dollar index, this market is fighting its battle at the 18-day average of closes, trying to figure out, should it go up, should it go down, which way? You've got the trend down with lower highs, lower lows. If you close over the 18-day average, the bias is up and momentum down. You have diversion. So you've got to wait and see which way this market wants to put everything together. Obviously, that's going to be the big trick to figure that out. I want to remind you of our offerings. Modern Trader Magazine. Now, they put together trading tips from the top pros. Don't just go over this and say it's another one of these. I think you'll find it's pretty interesting. They use a momentum model, if you will, Gantt square of 9. Do you know what it means for the NASDAQ 100? Do you know how to compute it? It's all in here. The absolute benefits of relative strength. Think of that as momentum. That's how I look at it. I happen to like our slow stochastics better than that. And I used to teach relative strength, but I found something better. Trading with money flow index. You want to look at that. Where's the money going? Think about it. Rules for bottom fishers and optimizing stops. And if you think people didn't look at this break in the stock market just recently and say, gee, if I'm going to fish for that bottom, how do I go about it? I think you'd be very, very wrong. So to get all this, and by the way, this is how these articles look to give you an idea, and I think it looks smashing, to put it mildly. Look at how nice, full definition, colors. Why? Not just that it's color. They're walking you through how to work with all this. And while you're on our site asking for this, you'll see our other brochures that we've got. You can either call us, go to our website to sign up for it, click right up here. That'll take you right to the page. I'm Ira Epstein. You have a good day.